Testing 1 2, testing 1 2, check 1 2, check 1 2. Can you hear me out there? Hello, hello. Testing 1 2, testing 1 2. Hey, hi there. How are you doing? Welcome back. Ed Ponsi here, your FX educator here on behalf of FX Street. Once again, great to be back. And taking a look at the British pound here. Before we get started, I just want you to know this is your room. So if you do have any questions, comments, etc., please feel free to jump in, and we'll definitely try to answer any questions that you have. Doesn't have to be, could be technical, fundamental, risk management, any currency pair that you want to look at. Please feel free. British pound really soft today. You can see the pound over the last few sessions falling from above 131 down to 129.40. And some big red candles this morning. So we're going to take a closer look at that. You can see on the hourly this is oversold, and it's not time to buy yet, but it's maybe time to think about it, right, and to figure out what's going on here. First, I want to move out to the daily. I'll show you the big picture. And so you can see the daily chart. There's a big red candle today. So the first thing I'm thinking is, well, if big red candle on the British pound, but it's actually been pretty bullish lately. I've got my bullish trend line moving up, and that seems to intersect with these lines at around 128. 128 looks like an important area. You can see this red line here. There's a support. It's around 127.85 actually. There's support, 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 resistance, resistance, support again. This area around 128 seems to be pretty important in terms of support and resistance. And this trend line, this bullish trend line, I'll make that a dotted line for you just to differentiate it. It seems to coincide with those areas pretty nicely. So the price seems to want to head lower, and it's what we call heavy. It's a heavy price. In other words, it just is drifting lower, even though there's no really. The first thing you look at is, well, is there bad economic data? And we take a look this morning at the retail sales figures, right? Retail sales were strong for the month of June in the UK. Whether you measure it month over month or year over year, whether you measure it with fuel or without fuel, it's better than expected, right? Stronger than expected. So this data is not the reason for the big red candle. So Richard says not getting any sound. Do we have sound? Do y'all hear me out there? If you hear me, give me a Y. If you can hear the sound of my voice out there. Okay, I'm not getting any Y, so nobody hears the sound of my voice. I'm going to have to log out. How about now? Sound is okay? All right, we're back. Okay, quick recap. We're on the daily of pound US dollar. We've got a lot of support resistance in this area right here. We've got an uptrend. The 128 area seems very important, but we also have higher highs and higher lows, right? Here's a high, higher high, low, higher low, and potentially another higher low here. We say potentially because we don't know, right? We don't know where this is going. This could keep going down. We don't know. It's an open candle, right? So higher highs, higher lows, bullish trend line. we're bullish. We want to be buyers. We're going to go to the daily. So we're at the daily. So daily is where we get our general direction. We're going to go to the 60-minute. 60-minute is where we're going to get our actual entry. And on the 60-minute, we're oversold on the hourly. The oversold does not mean that it's time to buy. Oversold means, excuse me, oversold means that it's time to get ready to buy. Okay? It's not time to buy, it's time to get ready to buy. Time to buy comes when this is no longer oversold, when the price pops out of oversold. So, I mean, look, some daring folks might take a small position before that happens and try to anticipate it. But you got to be careful because oversold can become more oversold. And more and more and more oversold, right? And that happens frequently. So we were saying, well, why is this down? Why is the British pound down? Is it because of economic data? The answer is no. If you look at this morning's retail sales figures, they're actually quite bullish. Retail sales, month over month, better than expected. Year over year, better than expected. What if we take out fuel? If we take out fuel, year over year, better than expected. Month over month, better than expected. There's no way that these retail sales figures are the reason. The reason why the pound is down might have more to do with comments that came out of, well, with a news report that is circulating this morning. Bloomberg, Financial Times, and other news sources are reporting that Deutsche Bank is preparing for a hard Brexit. There's an internal video circulating at Deutsche Bank, and it's been out there for a while. It's been inside Deutsche Bank for a while, but now it's leaked out. And Deutsche Bank is preparing for a hard Brexit and will probably book the vast majority of its assets in Frankfurt. Now, the Deutsche Bank is the largest Forex trading bank in the world. Okay, important to understand that. In addition, London is the Forex trading capital of the world. So, we're talking about moving hundreds of traders from London to Frankfurt, potentially. And it's not the hundreds of jobs itself that would bring the British pound down, but perhaps the influence of London as the trading capital of the world could be in jeopardy, because it's not just Deutsche Bank, right? Other companies have also already made similar plans. Standard Chartered, Nomura, Sumitomo, Daiwa Securities, Morgan Stanley. All these companies are looking toward Frankfurt as being their European headquarters. Citigroup is considering Frankfurt as their European headquarters. So this could be the reason why the pound is taking it so hard today, because you could be seeing the UK's standing as Forex capital of the world perhaps being challenged a little bit here by Frankfurt. Now, as I go down a little bit here, you can see maybe we've been hammered here 3 out of 4 hours here, big red candles, and now perhaps some stability. The pound maybe deciding, okay, maybe it's a little bit of an overreaction. We are oversold. Settling down in the 129.40 area. But when RSI rises above 30, preferably closes with a closed hourly candle above 30, that's your buy point. And we know that 128 is a huge support level. We looked at that on the daily. However, putting a stop under 128 is simply not an option with the price being this far above 128. It would simply create too wide of a stop. But, you know, once this RSI climbs back above 30, you take a look at this formation, whatever is remaining down here, and you're going to go under the low with your stop. How far under the low? It's kind of a judgment call. I'd say 10 to 15 pips under the low. This line here, I have a green line here, and that green line perhaps should be a blue line. So I don't know why this is giving me so much trouble. Get rid of that line completely. This area should be a target, 130.50. Let's make it blue. Why should this be a target? Because it's support and it's resistance. So it is both support and resistance. It is 130.50. So we don't know the exact price at which we'll be buying yet. But let's assume it's going to be around 129.50. One of our targets is going to be 130.50. Another target could very well be up here. See this resistance up here? There's resistance up here. I'm not going to shoot for the very top of resistance, but this is just above 130, 111. You see how this is resistance up here and resistance up here? I might lower that. This is really giving me a hard time. I've got something. Get that snap mode off. That's the problem. Okay. I'm going to put it just under 131. Maybe 131.95. This could be another target. Again, this is not a trade recommendation. This is just how someone might set this up. So this is resistance up here. This is resistance up here. Both of those resistance levels are just above 131. I'm sneaking that target down under 131 because this way you're under resistance and you're under the round number. So I've got a target at 130.95. I've got another target at 130.50. And I could potentially put another target here. You see this? Support here. That's right at 130. It's right at 130.05. That's support level right there. I might sneak that down just a little bit and put it under 130. You like that? These are potential targets. I'm not going to make the final decision on these yet because I don't know my entry yet. Why do I not know my entry yet? I don't know my entry price because my entry is based on the RSI. Let me get this line out of here. I don't want to create any confusion. The entry is based on RSI. So, in other words, when RSI gives a buy signal, I do not know where the price is going to be. Maybe the price is going to drop some more, and then RSI gives a buy signal. I've seen that happen plenty of times. So I can't make an assumption. I cannot assume that I'm going to know where the price is going to be prior to the buy signal being given. I'm not going to make that assumption. The UK does 80% of all euro swaps at the moment, says Richard. You know, that does not surprise me. And apparently about 40% of all Forex transactions emanate from London. And so you know, some banks are saying, well, we need to be prepared ahead of Brexit. We need to be prepared for this, and that's what the CEO of Deutsche Bank is telling his employees in this video that has now surfaced. Apparently, the video is at least a couple of weeks old, but it's now surfaced to the public for the first time. Interesting stuff. Is the market overreacting, I guess, is the question here. Because it's not just a question of Brexit, it's also a question of the dollar, which, if you were here on Monday, you know that we talked a great deal about the dollar and how it's really taken a beating, and it could continue to take a beating, mainly because of Yellen. Look what Yellen has done. Yellen has created quite a stock market rally. I'm going to show you. Ever since the speech, look at all the green candles. She's basically taken the bond market out of commission. She's taken future rate hikes off the table. Not entirely, but for the most part, she's taken future rate hikes off the table. And so the market is now saying, hey, it's party time, so let's go. That's great news for stocks. It's bad news for the dollar, which has done nothing but make lower highs and lower lows since the beginning of the year. And that pattern now continues. Now you're seeing a little bit of relief here. It's not like we never get a green candle. You're seeing a little bit of relief here, but I suspect that that relief has more to do with today's ECB meeting than it does with the dollar. The ECB, by the way, already met today. There was no change in interest rates. The minimum bid rate stayed at 0. And all the other interest rates remained where they are, right? So, of course, the attention and the activity is not really about the interest rate. It's all about the speech. Mario Draghi, head of the European Central Bank, he will begin speaking in about 7 minutes. So if you're in any euro positions, I highly recommend that you fasten your safety belt, because things are liable to get very, very crazy in about 7 minutes from now. So let's be very, very aware of that. And of course, we're going to thoroughly go over any type of reaction that the market has to just get a feel for the type of reactions that Mr. Draghi's speeches have created in the past. Here's a beauty. This one was from December 4th. See that big green candle? We shot down from 106.25 to 105. So we shot down over 100 pips, and then we shot up from 105 to 109. I'm sorry, from 105 to 107. So some pretty big moves. Tell you what, I'll take you back. Am I even looking at the right year? Hang on a second. Yeah, here's some serious Draghi mayhem. This is the candle this is the candle I was looking for. December 4th, 3rd, 2015. We open at 106.15. We drop 100 pips, and then we shoot 400 pips higher. That's Draghi in action. That's the type of reaction that his speeches have caused in the past, and he'll begin speaking in 5 minutes. So you've been warned. There was another one. Here's another one. right here. This was March 10th, 2016. On this one, we're going to drop from 110 to 108. We're going to drop down 200, and then we're going to shoot up 400 from 108 to 112. Very entertaining, right? Unless you're on the wrong side of these. So 4 minutes until Draghi. So again, fasten those safety belts. All right. So the interest rate decision, as expected, we remain at 0 on the minimum bid rate. The deposit rate decision stays negative 0.4. The statement said that they are going to continue quantitative easing at least through December, possibly longer. They could increase it or decrease it as they see necessary. This is what we know so far, but we don't know what is going to be said next, and we don't know what sort of questions might be asked at the Q&A. So that's all coming up starting in 3 minutes. Very, very exciting. Speaking of exciting, a huge move. Let's take a quick peek at our friend, the Australian dollar. One thing I love about Aussie is the way they break down their jobs figures. Saw this last night. You may look at that number, employment change, and you're looking for 15,000 jobs. And you get 14,000 jobs, and you're thinking, hey, okay, it's a little bit worse than expected, but it's not that bad. It's only 1,000 worse than expected. But in reality, because they break this down full-time and part-time, look at the full-time and part-time breakdown. Australia lost 48,000 part-time jobs and added 62,000 full-time jobs. So tell me now, is it bullish or bearish? I say, even though you only added 14,000 jobs, you moved a big chunk of your workforce from part-time to full-time. I say that's pretty bullish. Okay? Now, another thing to think about with Australia, the price of iron ore, one of the biggest exports that goes from Australia to China, has risen from $60 to $70 per ton. Let's connect the dots. China's GDP, better than expected. Price of iron ore, rising. Employees in Australia switching from part-time to full-time. It's pretty, I sense some bullishness going on over there. Okay? I sense that things are becoming a bit bullish over there. Even the participation rate increased. In other words, the amount of the percentage of the population that is participating in the workforce increased by a little bit. So it's kind of hard not to like what's happening in Australia right now. It's great to be long Aussie dollars right now. Of course, we're still in that Aussie yen trade. We'll talk about that later. That thing is still, I think we're up 500 pips on Aussie yen now. Nothing wrong with that. Okay, Mr. Draghi should be taking his seat right about now to begin his speech. And what I like to do at this point is take a peek at Euro USD. I'll go to the 1 minute chart. Just kind of zoom in here on the 1 minute and see what happens. And as his quotes scroll across the screen, right, then we can see like which of his statements is really affecting the euro or not affecting the euro. So Draghi, apparently Mr. Draghi is late. Okay, so perhaps we will stop right here because Mr. Draghi is not ready. And we will start again at the top of the hour. We will begin fresh, and we'll have everything that Mr. Draghi says. And we'll have it all wrapped up in a nice bow and anything else. But at least we have our pound US dollar set up all wrapped up. So we'll come back to Draghi in a bit, but we'll come back to Draghi for the next session. In the meantime, I'm going to flip over to the 60-minute chart, and we'll review our pound US dollar setup again, and then we'll end the session. So that's how we'll end this session with our pound dollar. So there we have it. Pound dollar taking a sharp drop this morning, showing some signs of stabilization. We are looking for an RSI buy signal on the 60-minute. We're getting closer to that. When it does occur, we've got targets at 129.95, 130.50, and 130.95. Entry occurs when the buy signal occurs. That's when a RSI comes above 30, preferably on a closed candle. And we put the stop under the lows. What are the lows right now? The lows of this formation as it stands now, 129.31 is the low. So we're going to go under that by at least 10 pips or so. We'll go under that low. Okay, underneath 129.31. Okay, so we've got our pound US dollar set up. Still waiting for Mr. Draghi. And when we come back in 30 minutes, we'll have everything from Draghi and perhaps another setup as well. Okay, gang, that'll do it for now. Thank you so much for listening. This has been Ed Ponsi on behalf of FX Street. We'll speak again in 30 minutes. Thanks again.